Good afternoon. Thank you, JPMorganChase team, for inviting all of us to speak today. You've been great partners, and it's wonderful to be at SOCAP. I'm Debbie Franchi, and I am the founder and CEO of SDS Capital Group. I started the firm back in 2001 to create a platform of different impact funds focused on different communities across the country, different investment strategies, but all focused on alleviating poverty through economic development or affordable housing. Today, we have over $1.7 billion of active assets on our platform and 6 different impact strategies. We've created over 25,000 jobs and over 6,000 affordable and permanent supportive housing units. I'm going to just talk about 2 of the different funds. JPMorganChase is actually in 3 of our 6 different products. This is one of the first funds that we launched in the South, the American South Real Estate Fund. We started back in 2014. And it was a very small fund, $58 million. It took 2.5 years to get to our first close, just to show how painful a first fund can be. We're currently managing Fund 2, $174 million, and we're in process of launching Fund 3, $500 to $650 million. So, a nice trajectory in terms of the growth. The reason we're in affordable housing is, as we all can see, no matter what community you're in, homelessness is growing. We've got an affordable housing crisis. We are missing about 7,000 units of affordable housing right now in the United States. In the South, where we're focused, there's a 2.3 million unit shortage, and it's getting worse. So this is going to become a growing issue for all of us in our communities. The types of impacts we've been achieving have been really going into communities with high poverty. This fund, we've made, between Fund 1 and Fund 2, we've made over 25 investments. On average, the communities we've gone into are having poverty rates of 29%. So these are very distressed communities we're investing in. The communities are more than 60% minority communities, and really in need of capital investment. A lot of disinvestment has happened over the years. And you can see from Fund 1 and 2 in this slide here that 87% of the units we have funded are affordable to families making less than 80% of the area median income. So, we do focus on workforce housing. That's more at the 80 to 120% area median income, but really our sweet spot and what we want to focus on is deeper affordability. This is just one example of an investment we recently made, and we really also like to find great women and minority sponsors to provide them capital for their investment. We've made 2 investments with this really great team of women, Elizabeth Property Group. This was a Texas portfolio we invested in so they could purchase it, 6 different properties. Most of those units are affordable, less than 60% AMI. We basically provided them the capital. They're a relatively new firm, so they face very high capital barriers to purchase this portfolio. A typical non-impact private equity real estate fund would not step out on this type of risk. They've been doing a great job really performing, rehabbing the units, and they're maintaining their affordability, which is part of the documentation. These projects will stay affordable for over 2 more decades at a minimum. This second project here is with a great team we funded. Again, they faced very substantial capital barriers. Team out of New Orleans, VPG. They take a lot of different types of rundown assets, multifamily or hotels, really bring them back to life, high quality, low income, affordable housing. We funded 5 small buildings for their first acquisition and rehab. We're now doing our second deal with them. So the idea with our funds is we help these sponsors grow so they can have more impact. We can get the capital to them. They could do bigger deals. They could do more deals because we're providing them the equity that they can't themselves come up with. The bank will fund 65%. They don't have the 35%. We come in and we'll provide 90 to 95% of the equity they need in their deals. And lastly, this is a project in San Antonio. It's a refrigerator plant, manufacturing plant that shut down in 1990. The community lost over 6,000 jobs. When I toured it 6 years ago, everything was burnt out and abandoned, graffiti covered. It's going to be 50% affordable units on the, as you can see the picture here, it's going to be fantastic quality. Over 360 units being built, big redevelopment that hopefully will catalyze that whole community and bring back, you know, what was once a vibrant community in the 70s and 80s, bring back jobs, retail, and some walkability and community. I'm going to go through really quick on our homeless fund. We're all in California. I grew up in the Bay Area. I live in Los Angeles. We have a homeless crisis. We have the numbers are even higher now, but at least 170,000 homeless in California. We have over 51% of the unsheltered, unhoused in the country. And on average in San Francisco and LA, a unit of permanent supportive housing for an individual that's unhoused costs $600,000 to $900,000 to build. So we raised about 4 years ago $190 million from institutional capital, mostly banks. Kaiser Permanente also invested $50 million. JPMorganChase is one of our investors. And we're financing over 2,200 units of permanent supportive housing with wraparound services to really help these tenants rebuild their lives. And we are financing units that are $246,000 on average for land and construction, compared to $600,000 to $900,000 that's typically being used. And the way we're able to do that is we're using a purely private sector capital model. So we're able to close a transaction in less than a month. We're able to get it constructed in 24 months, 30 months, compared to the typical permanent supportive housing, which has 7 to 12 different funding sources, mostly public sector sources that are very challenging, time-consuming to secure. And so we've really kind of taken the model and flipped it on its head and said, let's use nimble private sector money so we can do this quicker, faster, and scalable. This is just a rendering. This project's actually almost done of one of our early projects. It's also in partnership with AME, Bethel AME Church in South Los Angeles. And so right now we've got 900 units in construction, and over the next 3 years we'll finance another 1,100 using private equity capital. Thank you everybody for your time.